did this is because we strongly believe that the development of Africa is going to be done through agriculture. To me, it doesn't make sense that we have all the land available, everybody's fighting for our land, and we have the climate, so you throw anything, it grows, but we haven't been able to figure this out for so long. So hopefully this panel is going to help us address some of these questions and figure out why we haven't been able to figure this out and kind of start a conversation. So I'll turn it over to our panel moderator, Kobe, here to kick us off. And thank you for coming.
I think John has to welcome you.
So, thanks all for being here this morning. My name is Kobe. I'm the CEO of a small-scale private equity fund based out of Accra in Tanzania, Dar es Salaam. And these are 4 panelists that I've raised in our panel this morning. So I'll just let them do a quick intro under a minute about themselves. We want to hear more from you guys, so let's just do a quick intro and we can get into there.
Hello, my name is Nneka Eze. I'm an associate partner at Delbert and the director of our Lagos office. I also co-lead our agriculture and food security programs. My name is Jenya Shandita. I am the business development manager for One Acre Fund. I just want to spend a minute talking about what One Acre Fund does in case people are not familiar with it. We are a social enterprise that works in East Africa. We work with smallholder farmers because smallholder farmers represent 70% of the world's poor. And through addressing them,
You guys can hear?
Can you hear me?
Yeah.
Okay. And because 70% of the world's poor are smallholder farmers, if we can increase productivity for this population, we can actually alleviate poverty and hunger in Africa and in the rest of the world. What we do is we deliver inputs on credit to smallholder farmers within walking distance of everyone's house. The farmers pay us back over 6 to 9 months, and we also provide a lot of training along the way to make sure that the inputs are used in the most productive way possible. So this is my second role with One Acre Fund. My previous role was based in Kenya, and I was actually procuring all of the inputs for East Africa for One Acre Fund. So I am representing this panel. On this panel, I'm representing the organization, also from the perspective of a consumer of agribusiness, as well as doing my best to represent the perspective of the smallholder farmers here.
Thank you. Good morning, all of you. My name is Bharat Kulkarni. I represent a consulting firm called Stronger Farming Consultancy Services. We are involved into redeveloping the markets, especially agriculture markets and value chains in Africa. We have worked in several countries like Kenya, Ethiopia, Malawi, a lot of East and Southern African countries. My background, I am an economist by education. I have worked on setting up the Ethiopia Commodity Exchange. Subsequently to that, I have started this consulting firm, and since 2011, we have worked on at least 7-8 countries on various aspects of agriculture markets, which include setting up exchange networks, setting up organized markets, as well as access to finance, access to markets, those type of projects. So that's brief about me. Thank you.
Thank you. My name is Ravi. I represent Olam. I look after the Middle East, North Africa, and West Africa region for Olam. I've been associated with Africa for almost 20 years now, and I'm really proud that my company is one of those companies which actually started in Africa, and from Africa it grew to be a global company. So we started in 1989 with one product, one country, Nigeria with cashew nuts. Today we are present in 70 countries with some 44 agricultural products with a turnover of almost 20 billion Singapore dollars. And one of our main focus has been how do we engage with the local communities wherever we work in, and how do we improve the livelihoods of those people. I'm very happy to be on a panel with the people who have got concerns for the small stakeholders, small scale holders, because I believe if we have to change African agriculture, one of the important things will be for us to understand the challenges which are being faced by the small scale holders. It is good to talk about that there is so much of a 60% or 70% of the land is not utilized, but still the 30% which is utilized, it is still not to its full potential. So we need to get it to its full potential, and I'll be very happy to discuss that in this panel. Thank you.
So thank you. I think we'll just sort of kick this off, and I'll start with Eneka. I mean, agribusiness is really challenging. I mean, no matter how you look at it, from the farming to the agro-processing side. Where do you think the capabilities, the lack of capabilities are across the value chain, from the farming to the agro-processing level?
A very difficult question to answer, so maybe we can break it up and some of my panelists can also join me in the answer. What we're seeing is it's not necessarily a lack so much of capabilities as knowledge. So you're seeing innovations across the value chain, whether it's in the initial parts of production or it's later on in processing. But I think there's a challenge of lining up the right, let's call it capabilities, with resources and knowledge. So whether it's in the input side of things, actually having the right farming practices, or later down the chain, it's having access to welders who can fix your equipment that are from Africa, so you're not flying in American engineers for the most part, from what I'm seeing, to actually fix your equipment. So I think it's a large question about how do we actually train the right kind of talent to actually be active across the value chain. How do we align the financial resources to actually allow people to engage in the right types of input supply and inputs into their markets, as well as apply those into their farms or into their processing facilities. So from what I'm seeing, it's not necessarily a lack of capabilities, because we have the people. It's now, can we actually deliver the knowledge appropriately to them? So whether it's a question that I keep asking of, why is every single company having their own sort of training force, where we should perhaps have agricultural extension services, whether it's fully public funded or it's supported by private companies, there's, I think, a mismatch of those resources on the ground.
Any inputs from the rest of the team?
I think agriculture in Africa, it's expected to be $1 trillion industry by 2030. It's a huge industry, but there are challenges, and there are, gaps that need to be addressed. Of course, my co-panelists have already spoken about the input and other industries. It's basically the downstream and the upstream industries where a lot of investment is required, and it's really not happening. Seed policy related to seed procurement, seed technology, that needs to be upgraded. There's a lot of investment. The fertilizer in Africa is very costly. There's a lot of investment required to bring that, and innovation rather, more than investment, it's innovation required to bring that cost down. There's a lot of requirement for technology. Agro-processing is not so easy in Africa. So value additions really does not happen that easily. But one of the major things which I have noticed over these 8-10 years of my working in Africa is a major hindrance to the growth of Africa has been the access to market. Access to market has been it's a very informal value chain that works in Africa. And I have seen cases where, I'll give you an example, pulses. Pulses in India is huge. India imports about 7 to 8 million tons of pulses, which is huge when it comes to the quantity. And one of the major source of pulses can be Africa. There are 1 or 2 companies that dominate the whole pulses export to India. Imagine I spoke to the Minister of, Agriculture in Malawi, and I talked about India imports 100,000 tons of pulses from Malawi alone. And he said, really, I didn't know that. That's the level of informal market structure that exists, and this needs to change. If you really have to bring that the agricultural growth, into reality, you have to make market accessible. I did a study when I was in Malawi. If you buy from a trader who is buying it from a farmer in Malawi and exporting it to India, the price of pulses, pigeon peas, was about $650 per ton. Landed cost in Mumbai. If I go buy it from a farmer, pay all the cost and take it to Mumbai, it costed me $520. Now $130 is the cost that the farmer and the country is paying. That's per ton. And imagine 100,000 tons of pigeon peas exported to India every year. That's the difference that is being paid by the country for the lack of, the access to the market. So that's one area which I think really is very important for me.
Yeah. So I think the points that you have touched upon is good. There are three areas that I look at where the African agriculture is getting challenges right now. One is definitely like Bharat has said about the market access. I think that's a very, very important part. The other area which is there is about the infrastructure and the logistics. The cost of logistics in Africa is pretty high. And I think when Bharat was talking about the cost of taking it from Malawi to India, he is referring to some of those costs. It is far much more easier and cheaper for me to get a ton of rice from Thailand to the port of Abidjan than to take it from the port of Abidjan 600 kilometers inside into Mali. So that is the logistics challenges which are there. But I think still the bigger part for us and the bigger challenge for us in the African agriculture is about the productivity, about the yields. We need to make the base of the pyramid bigger. Then all these efficiencies will kick in, the market access will kick in. I'll give you just a small example. Africa is number one producer for cocoa in the world. Almost 70% of the world's cocoa is produced in Africa, let us say between 4 countries, Cote d'Ivoire, Ghana, Cameroon and Nigeria, almost 3 million tons. The yield is less than 500 kgs per hectare. It is actually about 400 kgs per hectare. Why? There is lack of training, there is lack of inputs. Just imagine what it can do to the local economy. If you are able to provide the access, if you are able to give the trainings to these farmers, and the yield goes from 400 kgs to let us say 800 kg, which is again an understatement in my opinion. 3 million tons which is grown in these 4 countries will go to 6 million tons. In terms of the impact, the monetary impact, the cost of cocoa today, the price of cocoa is $2,300 a ton. Let us assume $2,000 comes to the economy, both farmer and the government. We are talking about $6 billion among 4 countries annually coming in. And big part of that goes to the government in terms of the taxes. And into the rural economy, what it does to the rural economy. I think it breaks the cycle. It breaks the cycle in terms of getting more investment, getting people attracted towards the rural sector, and new activities coming in these rural areas. So this is only one example, but there can be a number of examples, whether it is a cashew processing in the rural areas. There are a number of examples which can be found in the different parts of Africa. So that is my point of view. Thank you.
Just to add to that, I definitely agree with a lot of what has been said. And I think one of the capabilities that's missing is that companies are not going deep enough into the rural areas. And part of that, I think, is the infrastructure challenges and costs. But what that means is, first of all, fertilizer or other inputs are not available in very deep in the rural areas of East Africa, for example. And also the cost is just insane. So, a bag of fertilizer is going to cost at least double in Africa what it's going to cost in the U.S., which is a huge challenge for the cost of production.
I'll just add one point there. I think Ravi's question or point about the productivity is an important one, but it has to come in functioning value chains that actually allow that increased productivity to either be processed or exported. What we're seeing across the continent is upwards of 50+% of post-harvest waste, loss, and spoilage, and it's quite a challenge. So if you look at, let's say, cassava, where 30% of your production, at least in Nigeria, is actually being wasted, or tomatoes, where 50+% of your tomatoes is actually just being thrown out, you start driving up production in some of these value chains that don't have effective market linkages, you're not necessarily going to deliver that value back to the farmers. So I agreed with you on that.
Interesting discussion. I think we've spoken at a very high level. Now, what I'd like for us to do is get into some specifics, right, and take some action items out of this. I was able to sort of group the challenges into 3, right? Not in any particular order, but I think the first one was, which was sort of across the board, was the go-to market, right? Which obviously logistics kind of falls under. The second piece of it is financing. How to finance sort of like these small-scale farmers to give them money input for them to be more efficient. And then the third item was the knowledge or productivity. I mean, I kind of lumped them together. So let's talk about solutions, okay? And I'll kick it off with Eneka. Productivity, okay? how do we solve that? How do we get productivity going? Like really specific, applicable solutions.
For me, productivity is really a finance question, and I imagine Jenya is going to have a lot to say about One Acre Fund's interventions and investments in East Africa, and hopefully soon more in West Africa as well. But the way we look at it, especially if you're saying smallholder farmers are a primary driver of production in sub-Saharan Africa, what we found through our work with Initiative for Smallholder Finance is there's a $450 billion per year sort of gap in finance for smallholder farmers, and $600 billion if you include China. What that ends up meaning is that farmers are not actually getting access to finance that they need to invest in their farms. So if you think of what I might call commercial or semi-commercial smallholder farmers. So these are farmers who are not just growing to eat, but are growing enough, let's say, bags of maize or whatever it is that they're growing that they're eating, but also selling to the market. They're not necessarily getting access to either affordable finance or appropriate finance at the time that they need it to invest into their farms and actually grow and increase their productivity. Beyond that, you obviously have the questions of market access, and I think all of these end up sort of being linked together. So if farmers, as Jenya was saying, can't actually get access to fertilizer or seeds or the right quality of them because the roads are not good, or they're sort of at the mercy of the one trader who has a significant markup above what it actually should cost, you're not going to end up increasing productivity. And then finally, if the farmers don't actually know how to use the inputs that you give them, again, they're going to apply the fertilizer. We've seen fertilizer and chemicals applied incorrectly onto whether it's leafy greens or whatever else. You end up not actually seeing the productivity gains that on paper are there. So I think it's really difficult to see each of those three categories separately versus really thinking of what are those solutions that can actually bring all of those things together. My perspective is that it can be difficult unless you have some level of aggregation to actually deliver to smallholder farmers increased productivity. So it's whether through a value chain aggregator, the likes of a One Acre Fund or a Babangona or the other market aggregators who are essentially, I'll call it a trader plus model, in that you're providing inputs, but you're also buying back from farmers and actually providing a market to sell your product. But you can also think about value chain actors like some of the large processors and buyers. So hopefully we'll hear from Olam as well, but they actually can also start providing some of those finance services into the market, whether it's through input finance or partnerships with banks. But I've also always said that the commercial banks are not necessarily the answer, and the microfinance banks, at least from what I've seen, primarily in Nigeria and in East Africa, are generally not strong enough to be the ones actively providing finance into the market for agriculture. So either we need to look at new institutions or existing value chain actors to be those providers of finance to smallholder farmers. That's my perspective and my view.
Well, I think you made a lot of my points, so thank you. No, that's perfect. It's great that this conversation is happening. Yeah, I mean, we definitely feel like financing is a huge gap for smallholder farmers, especially. But you can't just provide. I mean, it's hard if you just provide financing for all those reasons that Nneka mentioned. But what you need to do is provide financing, but also surround it with support. Support through helping farmers basically invest that loan that they have productively. So one example could be asset-based financing. So what we do, for example, and a couple of other organizations do, is instead of giving loans in cash, we give loans in seed and fertilizer, so that to ensure that those assets are going to be used productively. Then we also do a lot of training to make sure that people know how to use those assets. And then we also provide things like crop insurance, for example, which takes out some of the risk of farming, which is also really important, right? Farming anywhere is a really risky business. And then other things that are important for farmers could be, flexible repayment terms that are based around the farming cycle and are more, adjusted to the actual timing of harvests and planting. And of course, the training, the extension services are super important. So just a second, pretty much what you've been saying.
Thank you. I think a lot has been said about the input sector and the need for seed and the inputs in terms of fertilizers and all. I'll give you an example. I'll start with an example. I was in Ethiopia. We were working on the value chain for coffee. We redeveloped the whole value chain. We changed the marketing system. The whole process was redeveloped. Within a year's time, about a year's time, we could see that the average grade of coffee that used to come to the market was about, before the market actually was started, it was about grade 7, 8 on a pointer scale of 10, based on the cup value and the cup testing and the raw value. It was about grade 7, 8, that type of grade. When the market started to function properly, and we started to look at the grades, the average grade was 7, 6, 5. It moved up. Now, coffee cannot. It's a perennial crop. The flowers won't change over a year's time. So there is something else that actually increased the productivity. There is something else that actually made the quality go up. And when we looked into the issue, what exactly had changed, what we found was there was a lot of post-harvest handling attention that was paid to the coffee. And the reason was you could now actually differentiate between a good quality and a not so good quality coffee and price tag it based on the quality differentiation. One of the major challenge which indirectly affects productivity as well is the challenge related to the quality certification, the quality standardizations. There is no incentive for a farmer to grow a better crop or handle a crop in a better way. So if you have a crop, you are paid at the fair average quality level. It may be much better than what you are paid for. It may be lesser, but then you don't have an incentive to actually take care of the crop. And in that case, what happens is a lot of quality is lost. A lot of deterioration in the quality happens after the crops have been harvested. Of course, before harvesting, there are a lot of issues that need to be addressed. But after harvesting also there is this type of challenge. About 40% of the crops get lost just because of non-availability of proper post-harvest handling. So now when you actually tag a financial incentive to the quality of the product, you can actually see the product quality improving. You could actually see investments into better quality and productivity going up. So that's one area which I think has not been given that much of attention, but then that's an area which can actually add a lot of value to the existing value chain, the existing productivity, and if you actually properly invest into the post-harvest handling technologies, it's not about just building big warehouses. There are innovative solutions to it. And if you invest into that, you can actually raise the productivity by 30%, 30-40%. You can bring down the post-harvest losses from 40% to, less than 10%, which is again an improvement in productivity. So that's one area which we definitely should look at.
Thanks. So I think one of let me look at this problem with two angles related to productivity. I think one of the basic thing to improve the productivity is the investment in R&D, research and development. And I think that is one thing where we are lacking in Africa today, in my opinion. Any research in agriculture has to be location specific. It can't be general. You can't import something from India, something from US and start implementing it. So even for a variety to come in, let us say a good variety which has been selected in some other part of the world, it still takes 3 to 4 years of trials to see whether it is acclimatized, whether some modifications need to be made before you actually release these varieties. So I think these parts have got missed out in Africa because of the various issues, whether it is issues related to funding, whether it is issues related to the various conflicts. I will take the example of WARDA. It is a West African research station for rice. It used to be there in Côte d'Ivoire. Because of the war, it shifted to Benin. It has come back. There has been a loss of all the research which was going on. So in my opinion, that is one particular area which need to be tackled, and it needs to be tackled by the government. It's a long-term thing. It has to be done by the government with the multilateral agencies supporting that across Africa, in the regions, and I believe that institutions already exist for these type of research. So that need to be focused upon. On that, more funding needs to go. Then comes the private sector. Now I think private sector has a large role to play in these type of things. And I will start off with which Gina and Nika has already talked about, financing. So we believe, I think there are, in Olam, we have been working in Olam in Africa for almost 26 years now. And over the years, we have tried to distill out the various principles which we believe are going to be helpful for the community, and we call them Olam Livelihood Charter. There are 7 principles in that. One important thing is the financing. I think financing is a very critical part. You need to ensure that the small scale holder is getting a financing at the right time for the right thing. Because ultimately we should realize that he's a poor guy. If you are not tracking that financing well, it can go to some other needs, genuine needs. It is not that he is diverting the money somewhere. He can have some other genuine need, and the investment, the financing which was supposed to be for the productive asset goes somewhere else. There needs to be the asset financing, like Jenia was talking about, into the assets, which may be long term. It may be for a 1 year, 2 years, 3 years, into the productive assets. So the financing is an important part. Then comes the productivity, the yields. What is it that you can get in terms of the inputs, whether it is seed, fertilizer, pesticides? So you need to have those productivity training for the people. Then the labor practices. How do they go about it? Third, the fourth important thing is about quality. So you have a volume, but in case you improve the quality, like what Bharat was talking about, your realization goes up. So the quality training is again an important part. More and more, we are seeing that there's a trend towards traceability. There's a trend towards certification. Can the corporates like us play a role in trying to link the small scale holders with the ultimate consumers? What do the ultimate consumers want? And basis that, you provide the traceability. So that becomes the sixth thing. All these things go towards improving the realization for the farmers. And then you should also see that there are various people who want to do good for Africa today. There's no dearth of funding, in my opinion. Then you need to see that that funding which is there is going to the right place in a right manner, whether it is building the social infrastructure. By the social infrastructure, I mean schools, hospitals, and things like that. And there's enough funding for that, in my opinion. There's enough funding. It can be more, but it is there. So how do you ensure that it is getting targeted correctly? So in my opinion, those will be the principles which people can look at. And then there will be the ecosystem of the small, the private players who can work around this ecosystem, around these trade flows to improve the efficiencies, whether it is in terms of the IT-based solutions or transportation solutions or the warehousing solutions. There can be a list or a group of the service providers which can add efficiencies. These will be outside that value chain, but they will be there and adding value.
So I'd like us to take a step back, right? We've been talking a lot about private sector, and obviously it's really, really important. When we talk about farming or land in Africa, the government has such a primary role to play. And the government is basically the custodian of land in almost every African country. You know, like institutional governments or chiefs or family. I mean, it's all form of governance in these countries. So let's take a step back and look at the role that the government plays in agribusiness in Africa, and how it can best structure to make sure that these three items that we've discussed, the go-to-market financing and the productivity, can reach a certain threshold to make sure this is a really success story. I'd like to throw that to you, Ravi. Given obviously your background in the private sector, I'm sure you've dealt with a lot of governments, and just share your experience and then what you think governments can do better to help drive this sector.
I think I touched upon one of the things which the government can do, which is basically the investments into the research and development. I think that's a key. It's a long-term, long gestation investments.
So you would leave that for the government, right? So not private sector. Government should invest in R&D.
Correct. So you're asking me about what the government should do, isn't it? Yeah. No, I think there will be some private sectors also involved in it. But in Africa, because of the attractiveness of the input industry, I do not see lots of big names working a lot in Africa. That's the reason why this particular thing has to be taken up by the government. In my opinion, the other thing that the government should be focusing on will be the infrastructure. Whether it is in the building of the roads, whether it is in terms of building of the institutions. So that is the second thing which the government should be looking at. And third is related to the policies. And in the policies, in my opinion, land title is one of the important things which is there because it also limits a small scale holder in terms of getting access to financing. So in terms of the policy, one thing is the land title. Then I think in terms of developing the markets better, how do they have the regional corporations, the regional markets to work better? So governments can play a very big role there. Then policies to encourage the value addition in these places. Government needs to come out with the strong policy. Last but not the least, I believe the government has a very strong role to play to protect the interest of small scale holders. They need to ensure that the interest of the small scale holders are protected and protected well, whether it is in terms of the pricing, whether it is in terms of how the market will get organized, whether in terms of the cooperatives, the aggregations that Mika was talking about. So I think those are the three levels I would believe that the government can act.
I think there are a lot of countries in Africa which have a very, very strong potential for agriculture, but that has really got lost into the government policies because of the over-focus on either the mining sector or the oil or the other natural resources. So what has happened, like take the example of Nigeria. Nigeria has so much of potential in agriculture, but it is really not, the policies are really not justifying that potential. And that is one area where the government have to be careful, that is one area. There's a belief in Africa that next set of billionaires would come from not from oil but from agriculture, but that has not actually translated into policies in many cases. Making agriculture as a central focus point for the policy development, making agriculture as a central focus point for foreign direct investments and technology participations, these are areas which really have not been getting that much of government attention, which needs to be given. Second thing is, after 90s, when the deregulation of the agriculture markets and the agriculture system started to happen, there was a very difficult situation for the parastatals. Now, the parastatals, most of the agriculture markets in Africa, any country you go, were dominated by the marketing boards. Slowly they started to be deregulated, and that led to a situation where there was nobody filling in the gap. There was no policy to actually fill in the gap that was created by the exit of the parastatals into either storage, into either procurements, into various aspects of agriculture market or agricultural industry. So that still remains unaddressed in many countries. So how do you actually fill in the gap? Can the private sector be encouraged through policy environment to fill in those gaps? Yes, definitely, but then that would require a very focused approach from the governments to develop those policies. So those type of policies is one area which I think needs a lot of focus from the government. Of course, Ravi talked about the cross-border trade. The cross-border policies, everybody wants to be integrated, there has to be a regional market, everything is good when everything is going fine. The moment there is a crisis, everybody shuts their border. Now, that's a very unpredictable policy environment which does not provide an ideal, situation, which does not provide a platform for agribusiness investors to invest. I am setting up a, processing plant in Rwanda, but I know that the moment there is a problem in Kenya or Tanzania, the borders would be shut and I cannot access my raw material, I cannot access the markets, and then what do? My business model has just gone for a toss. So those are areas where stability in terms of policy need to be brought in.
Yep. Also, talking about cross-border trade, I think it's important to have consistent policies for inputs as well. Like, for example, fertilizer standards across different countries in East Africa vary just slightly, but it's to a point where, if you buy fertilizer in Kenya, you can't necessarily export it to Tanzania. So for organizations that work across the region, that presents a difficulty. But other things that governments can really do, I think, are extension services. So governments have these really elaborate networks of field agents that are reaching smallholder farmers and larger farmers also, and utilizing those in the best way possible can make a huge difference in productivity. And then sometimes, when appropriate, smart subsidies for inputs could also be really helpful in stimulating market demand, as long as they don't, crowd out the private sector and there's a good approach to phasing them out. So.
I would look at the government role perhaps in two different ways. So one is this question of constituencies and constituency development. And I think often historically, whether it's some of the agricultural banks or its subsidy programs have been used to support elections and election cycles. So you see smallholder farmers almost being maybe a beneficiary or maybe not. I don't know what the reverse is of some of these, not government policies, but let's say government investments for supposedly their development, but it's really just about getting the votes. So I think that's one side of things, and there's a large question about how do you support what we might call subsistence farmers to actually develop and sort of move above the poverty line. And then I think there's a question on what we might call the agribusiness side of things, where you do have ag entrepreneurs and smallholder farmers active and more commercialized. How can you actually make the sort of business investments? And I think on that side, there's a few things we've already discussed. One on the loan side, the question of the seeds. I think my view would be you might want to have private involvement on the seed side. So if you look at India and the way the seed research institutes have actually been partnering directly with private sector, I see there is a potential for that in Africa. I don't know when, but my hope is that that comes, because I think without that sort of focus on market, you essentially have a ton of R&D happening that's not actually going to be useful for smallholder farmers. So scientists just sort of thinking. And then I think one we haven't discussed yet is really this question of investment promotion and trade policies. And we're doing some sort of one-year-long projects with SAGCOT in Tanzania and with the Agricultural Transformation Agency in Ethiopia, specifically looking at this question of investment promotion and seeing how we can bring investors into Ethiopia, bring investors into Tanzania. And a lot of the questions they're having is not so much on the market, which I think we can prove very easily the billions of dollars that could come out of these markets, but how can they either invest in a way that makes sense versus other markets, or get their money out after they've made certain investments. So all these questions around currency, around tariffs, et cetera, are quite important when we're thinking about how to develop and bring in the right finance to the markets. Then the last one, from the Nigeria perspective, the finance question has come into play. So there's been pressure for the banks and others to actually lend into agriculture. And I think some of those risk-sharing schemes like Nursol in Nigeria are exciting and should be scaled up across the continent in terms of helping to open up and unlock financing into the market and providing some of that risk coverage. So I think the volume of the public sector can be used for some of those elements and not necessarily for some of the direct lending that we've seen historically.
Well, thank you. I think at this point we're going to open it up to the audience for Q&A.
Okay.
Shola?
It's okay, I'll cheat and start with the questions. So, Dr. Bharat, one thing I love that you mentioned is that you believe that the next set of billionaires will come from agriculture and not from oil. Mopoti and I certainly believe that, which is why we put this panel together. Hopefully we can make some billionaires out of this. But many of us here are young professionals with plenty of enthusiasm. We possess good business administrative skills, but we don't have a lot of capital or a lot of access to capital or the agriculture networks. What would you say are the best ways for people like us to plug into the agriculture sector to be able to create and capture value? And this is a question to all the panelists.
Okay.
I think one of the interesting things that is happening in agriculture, there are a lot of startups that are coming up in Africa. Here, there's the capital. Capital, again, I feel capital is not say a big challenge in Africa. There is capital available. There is it's about that talent to actually use that capital, invest into innovative agricultural projects, or bring in more and more say innovation into agriculture. There's a company I'll share with you, a company called Litenga Holdings, which has actually transformed the extension service into a business model. So they are doing a business model at a fees for the farmers, and farmers are very happy accessing their service because there's a commitment, there's a deliverable, there's a KPI that they need. And a lot of say money that was actually getting invested into extension services, say through angel capital or through the donor funding, is now actually getting rerouted through these type of innovative models. So those are happening. A lot of, say, what Africa is now gaining is a lot of diasporas are going back to Africa, investing into bringing with them the technical expertise which is much needed, which is another boon, which is another thing that is helping Africa grow. The linkages with the global markets is improving. We are working on a project in Kenya where we are trying to link about 1 million smallholder farmers who have a very small production capacity with large-scale pulses buyers in India. Now, it's basically an outgrow scheme, say, through which the Indian buyers are actually trying to buy and help the smallholder farmers. And it's again, the aggregation or the link between the two parties is a private entrepreneur. So those are innovative models that are coming up, and I think, that gives a lot of hope to me that there would be a lot of investments in those type of models coming up.
I'd say it's a few things. So one is figure out if you want to be an entrepreneur or not. I always say one day I will have my ag business. And so I'm starting to look into how do I acquire land, or should I lease it, et cetera, and do all of the questions of soil testing, et cetera. And I think part of it is making that decision that, do I want to be an entrepreneur or not? In the meantime, I've invested in a few ag businesses just from my own finances. And I think that's another way. So probably in your networks, you have friends who are moving, perhaps from diaspora, and starting some of these ag businesses. And I think there's a question of how can we actually start, maybe just at the friends and family level, to invest in those businesses as well. So I think there's a question there. And for my friends who have gone into agribusinesses on the continent, a lot of it is the pre-work and really picking the right value chain, picking the right stage of the value chain where you think you can actually make an impact. So really doing the market research, market analysis, and figuring out where you want to play. And then I think the fact that you're in this room likely means that you have networks that you should start looking into and think about who are those people in your networks who are either have similar interests that you can either partner with, or who can start introducing you to people who will be important for your business. And then I think the other part of that is obviously bringing in technical expertise if you don't have it. So if you're not an agronomist, find people who can help you with some of those questions if you're at the primary production stage, or if later on you need to bring in an engineer or welders or whatever it is, you start building that sort of that business, I guess, build the team around you that's actually going to help you deliver. So that would be my advice on that.
And I would say just, go try working in some part of the agricultural business in Africa and see where you see those missing links, right? Because until you're actually there and you see, oh my God, that would be a great business idea, I should start a business, right? You don't know. And I'm going to make a shameless plug that 1 Acre Fund is hiring a lot of people. So if you're interested.
I think Nika has put it very well that you guys should be very clear that whether you want to be an entrepreneur or not. And I think Africa needs a lot of good, bright people like you. So all of you are welcome. I think there's a lot of opportunity. But be very clear that you want to do it, and all the pre-work she has talked about, I think, very good advice, Nika.
So, how about you? No. Just it.
My question goes to actually getting involved in processing. So I started doing some research about getting into agricultural processing. And I find that there's so many challenges and roadblocks to getting into processing. So if you go to a regular store like ShopRite, say for instance, you will find that almost all the products there are imported. So why is it cheaper to import than to actually make food that we already produce into processed food? Because now we find that there are government stipulations of taxes, levies, even to get the machines running, importing the machines. You also have issues of power supply, the storage facilities, and all these things that are going to impede getting into processing. I do understand that processing is just one part of the value chain, but it's a very critical aspect. But if you going into Africa, you're going to meet all these challenges, then I would say it's easier for them to just import. So how do we deal with these roadblocks, these challenges that comes with bringing machines in and actually doing the processing ourselves?
So we're just going to have one panel answer this, and I'll show this to Aneka. And then we'll, just in the interest of time.
All right, thanks. I think you have to figure out if you can meet the quality standards that a ShopRite actually needs. So I have a friend in Nigeria specifically providing peppers, so capsicum, bell peppers. Sorry, I've been in Africa for too long. I no longer know the American English word. So bell peppers and chilies to ShopRite. And they're obviously not yet going into processing, but they're going to go in that direction. And one of the things they did is partner with Israelis who know about greenhouse technology and who are helping them get to the right quality that a ShopRite actually requires. So I think part of it is figuring out where can you actually get to the quality and starting with that part of the value chain. And the other side of it that probably will help is figuring out if you have some level of networks. We're hearing a lot from the banks, particularly on, I think it was cassava processing, challenges actually importing equipment where, you needed to get from, I think it was the Ministry of Trade, some sort of form saying you don't need to pay a tariff, and then in the 3-4 months that it took, the demurrage fees were actually more than whatever the tariff was going to be. So there are a lot of challenges on that side of things, and I think it's probably having more of the access to capital in your bank than you would actually think you need, because you're going to hit some of those additional costs that come up.
Just quickly.
So I think it's a very right point, and I think I tried to cover that when I was talking about the investment which the government should be doing in R&D. So I think it's a policy-related issue, and we have got very good examples globally on this. Whether we take the Green Revolution in India in 1960s, it was backed by massive investments by the government, along with the various international institutions. Into the agricultural university, into the various research foundations, coupled with the strong extension activity. And it happened in 1960s and 70s, and the momentum has carried on up till now. Unfortunately, not much research has happened in the past 20 years, but that sort of a model is needed in Africa, and I completely agree with you. There needs to be an intention, and there needs to be a push in that direction.
So you in the back?
My name is Kevin. I'm building roads in rural Uganda, and my question for the panel is, how do you guys cope with infrastructure problems? Because right now the government has no budget and no appetite to rebuild these roads. You guys are increasing your productivity by 4, 5, 10 times. So all this progress coming,
So, Bharat?
I think infrastructure has been one of the biggest impediment, if I call it. But then there have been innovative ways to actually address the infrastructure problem, like warehousing. I said it does not mean building huge warehouses. There are solutions which are like you can do on farm a cocoon warehouse, which is like a tent, but it is environmentally very capable enough of handling large scale storages. So those type of innovations have come in, where innovation has reduced the cost of investment into infrastructure. Second thing, especially in countries where the agricultural markets have been redefined, there's a lot of spillover effect that has happened, which has created business opportunity for investment into infrastructure by private sector. See, up till now, the biggest investor into infrastructure had been the government. Infrastructure I'm talking about is the warehousing, storage, the quality certification agencies, and these type of infrastructure. Of course, the road and the railway network is still within the government domain, but then there are private investments happening into these type of infrastructures. The thing is, can you create an environment which enables private sector investment to come into these type of areas? Can the markets be structured to spill over these benefits? In Malawi, I remember when we started with the exchange, which actually linked the smallholder farmers to the large-scale buyers, and there was a business model within it, and we then put out an advertisement to rent out warehouses. There were at least 4 to 5 entrepreneurs who came and who said, "We'll build the warehouse for you. Can you actually have a forward agreement for us for about a 2 years rental agreement? If we can do that, we are ready to invest." But that's up till now, we never thought that in Malawi we could actually look beyond the parastatal, that was the ADMARC, which had huge storage capacities. But now there is someone who wants to invest into that. So creating that environment has led to a lot of investment by the private sector into infrastructure, and that has and then say when you create that environment, the government also looks into the say aspect and says, okay, now I would make more sense by investing into railways or investing into road networks and say making that more accessible. So the investments get readjusted because of the new environment. So that way, the infrastructure investment is actually getting a boost from the private sector as well.
Okay, I'll shoot for the gentleman in the suit in the middle there.
Nigeria, basically the price of oil dropped, so the naira to dollar conversion was pretty vulnerable recently. And it looks like Nigeria has an over-dependence on oil and gas. I want to ask you guys, we now see that agriculture is developing industry. How do we shift the mind state of the country as a whole to now invest in agriculture, not only as like a development project, but actually as a basically increase the GDP of the whole country. Put it in the same place you put oil and gas, put the same emphasis, put the same importance on agriculture, and maybe Nigeria be able to diversify, your portfolio.
So I'll send this over to Ravi. I mean, given Olan's presence and skill on the continent, you'd probably be in a better position to answer this.
I think Nigeria has been trying to do the diversification into agriculture for quite some time. Unfortunately, the dominance of oil has not allowed them to get the desired results so far. Hopefully now where the prices of oil are, probably they will get more motivated towards that. So it's like a issue about burning platform. So there is now a sense of urgency. Probably that sense of urgency wasn't there so far because they were very happy, satisfied with the earnings that were coming in from the oil. So at least the scene is set now, in my opinion, for the government to start acting. And as far as Nigeria is concerned, I've not worked directly in Nigeria ever, but since my company has a presence there for a very long time, so I keep on hearing from my colleagues about Nigeria. Nigeria has always been an has a very strong agricultural history in the past. Unfortunately, it has got lost. And in my opinion, it should be easy if the government focuses on it, and it will come with the massive government policies in terms of the land. How do they ensure the land is going to the farmers, and to ensure that some of the big corporates are coming in if the government is not able to do the extension services themselves. So whether they build up the hubs around the various crops, let us say a sugarcane farm which is there, and then you allow the company to work for the extension of the sugarcane. Somewhere it is related to the palm, somewhere it is related to the rubber. I think they will have to come out with those sorts of policies to really give it a flip. I think so far they have been giving it only for the processing industry, the agricultural processing part, the benefits which are coming in to the investments, not to the agricultural per se. So I think that needs to change. Hopefully that will change. I don't know, Neka, you are from Nigeria, so you'll know better.
Thanks. I'll just add a few points. I think, let's say, pre-2015, we did see significant increase in terms of agricultural lending, particularly on the commercial side, on processing, with the growth, I think, from 4% of bank portfolios to about 7-8% in terms of the amount of lending to agriculture. So we did see some positive shifts. That was specifically the efforts of the CBN governor and the former CBN governor, former Minister of Agriculture, to actually drive agricultural development. But just generally in Nigeria, there's not enough money in the market to actually finance business activities. So if you look at Nigeria, I think it's lending versus GDP in Nigeria, even versus Kenya, you see a pretty major gap. So if you find sectors that are looking either more attractive in terms of a short-term or return on investment, like you were seeing in oil and gas, then as a banker, what are you going to do but go for the sort of high-margin businesses? So I think some of the interventions where you had concessional finance, so 9% CAX funding and others from the central bank, it will actually help support the sector. There's a question of continuity and stability. And now in Nigeria, you have a situation where the government budgets are not being fully funded. So I think, at least for the next couple of years, it's going to be difficult to continue some of the interventions that have supported agriculture over the last, let's say, half a decade. So I think now it's a question of, okay, can you bring in external capital? But who wants to lend in Naira at this point in time? And if you're lending it in euro or in dollars, who can actually pay you back? So I think there's a lot of questions that are coming up. Our hope is that in the next few weeks, months, through the National Economic Council and others, we can start to actually see some shifts there. But I think there's a major question on agriculture because of the macroeconomic conditions in the country. So my investment in ag, sadly, is not in Nigeria. It's next door in Cameroon. My hope is that I'll start my own ag business soon, but there's a question of how. So for me, I'm like, okay, maybe I start with the land side, and then we wait a little bit and see what happens in terms of actually going further down the chain.
I hope Nigeria steps its agriculture game up because I want to finally taste some good Nigerian jollof. So, last question. I'll take you.
My question is about subsistence farmers. Where given that most subsistence farmers in Africa take formal education, so how do you think that we can use training to increase productivity, given that some of what the agriculture farming which is happening in Africa is by tradition, so this is how they've always farmed, like cassava. So if you come in with your formal education, like how do we train them to accept that?
Yeah, so absolutely. I think there are so many ways to deliver training in a non-traditional setting. So the best way to train farmers would be to actually go to the farm and show them how to, what the sort of best agricultural practice is right now. And that's the method we actually use also. We go into the farm, we show people how to space seeds, how to apply microdose fertilizer, and then make sure that everyone gets a chance to actually try it during the training. And then also, if you train people in groups, for example, then they're able to reinforce that learning that they had amongst each other, which also then kind of reinforces the knowledge.
Just to add to that, farmers maybe they don't have they might not have formal education, they have never gone to school, but they understand the language of money. It's very, very important to understand. You show them the monetary benefit out of a new agricultural practice, and they'll do it. And this is my experience. Like in Ethiopia, there are illiterate guys who don't know how to read and write. They have formed private sector companies, or they have got together and formed companies to trade on the exchange because that was a new opportunity that they saw. So it's for me, it's very important to monetize the training. Like the outcome of the training has to be monetized. It should be adding to their profits, and then these guys would immediately learn it, implement it, and they would do it much better than anybody else.
So I think that's it. It's 11:45. Thank you all for coming. I mean, you can come down and have a chat with the panelists as well. Thank you.
Before everyone anticipates, my name is Alan. I'm from Johns Hopkins Carey Business School. So I worked with Dow Sciences for 2.5 years. And they actually become the global engaged there. They're interested in going to Africa. They even a project they even shared with me across different companies.